The featured company is a paid client of Proactive Group Holdings, and this recording is disseminated by Proactive on its behalf.
If you put those two things together, deploying assets for yield as part of a debt makes it an exempt activity under the U.S. Investment Act, and you get the operating company exemption. And now you can maximize the value of your holdings by generating the maximum amount of yield. So, needless to say, we've been approached by a lot of companies for all kinds of strategic partnerships and even more aggressive business combinations.
All right, welcome back inside our Proactive newsroom. And joining me now is Bandeep Rangar. He is the CEO of Finekia International. And Bandeep, it's great to see you. How are you?
Very well, and always a pleasure to be here. Looks like you're also in a sunny spot like I am in Canada. So.
Yeah, it's a beautiful day today, and it's a great day to be talking about your company and some things that you have going on, all within the digital asset treasuries market. And why don't we start there and give us some thoughts from you, just on the outlook of the sector itself, and more importantly, what they are, so people understand.
Sure. So, the acronym used right now is DAT, right? The Digital Asset Treasury Company. And it kind of mimics the whole idea of the United States going after a digital asset strategic reserve. And the idea is that you hold crypto assets or digital assets as a balance sheet item because it gives you long-term value. Now, the three kind of things that are triangulated here to make this happen are the following. One, a pioneer in the form of MicroStrategy, which is now called Strategy, which started this whole um, strategy, if you may, no puns intended, during COVID, when there was not much trading activity. They had a trading business, said, what else can we do? Well, let's hold on to Bitcoin. So they started accumulating Bitcoin, as did some countries like El Salvador. But in a corporate sense, strategy led the wave. The second thing is, of course, countries and companies have realized that you don't want to make the mistake which Germany did last year when they sold north of $2 billion worth of Bitcoin, only to see that value double the following year and say, oh, we just gave a lot of money and left it on the table and gave up that upside. So holding on to crypto, particularly the top coins, has now become a strategically valuable thing to do. And the third thing that triangulates here is, of course, the change in regime in the United States, which has now made crypto assets a legitimate asset class. And large institutions are looking to buy into crypto so that they can keep that as a long-term holding. So the access points have grown, and the value of that is now seen to be there in corporate boardrooms.
And your company as well wants to see a bit more rise in DATS and what you're doing. Tell us a little bit about your role within DATS and how you see that shaping moving forward.
Absolutely. So, what's happening with DATS is that they command a premium. So typically you have public companies that have underlying private investments where they trade at a discount to the underlying net asset value. DAT companies are trading at a premium, and that's because of the inability to access crypto in their sort of native form by large corporates. So they buy ETFs and DATs as a proxy to getting those underlying crypto assets. But those premiums are compressing. If they were 11 to 20% higher, 11 to 20x, sorry, higher about a year ago, they're now like 1.5 to 5x higher, and they're dropping. So where we fit in is a really interesting play for DAT plays that are looking at, hey, long term, why would someone pay a premium? If I can buy Bitcoin directly, or more importantly, buy them through ETFs or ETPs, which are at the net asset value with marginal cost for trading them, why do I need to hold on to a premium priced shares for the same underlying asset class? So we solve two problems. One is, for large DATs, there is a U.S. Investment Act threshold of 40%. They can't hold more than 40% of underlying securities that are income generating, so interest bearing. So if you realize all these crypto assets are not just digital assets, they're also live software where you get yield from decentralized finance or staking. Well, if you park more than 40% of your underlying treasury holdings in yield bearing activities, you violate that U.S. Investment Act. So
Mhm.
the only way to get around that is if you have an operating company, and an opco is exempt from that, so you can be seen as an investment holding company, not as an investment management company. Now, ETPs are operating companies. So if a DAT holds its digital assets through an underlying ETP that's part of the same group, you suddenly get the exemption. You can put 100% of your coins in yield-bearing activities. So what that has invited is a lot of interest in Finekia for its ETP business. We have probably the widest range of licenses in the world when it comes to the kinds of assets we can hold in tokenized format, and the kinds of activities we can deploy those assets on in terms of generating yield. So if you put those two things together, deploying assets for yield as part of a DAT makes it an exempt activity under the U.S. Investment Act, and you get the operating company exemption, and now you can maximize the value of your holdings by generating the maximum amount of yield. So needless to say, we've been approached by a lot of companies for all kinds of strategic partnerships and even more aggressive business combinations.
Yeah, that I was going to sort of read between the lines in what you were saying there, and in relation to Finecchia, what you're suggesting here is that there's great opportunity as far as the ETP market outlook is concerned. So, is am I reading on the right side here?
Yeah, I mean, ETPs still today have almost twice the number of, say, Bitcoins that are out there in supply in their holdings, right? Even though
Yeah.
DApps have come up to about 100 and between 120 and 140 billion dollars with the BTC, the ETF ETP industry is about 175 to 200 billion. So there's a lot more still held in ETFs, and over time, I believe those will somewhat converge. And what will happen is the companies will become more like perhaps investment holding or asset management companies with both sides of the fence rather than just sitting on one side.
Okay. Tell me a bit about your role within ETPs and sort of where you see the focus heading here.
So we've been really careful to get, future-proof permissions. So we believe that over time, people will look at yield, not just holding it. So our subsidiary in Europe has the widest permissions that are currently permitted to hold coins and deploy them for example, DeFi activities. We have two products out right now with about 55 to $60 million worth of AUM today. One is a BTC product called YBTC, yield on BTC. The other one is a Cardano product called YADA or YADA, which is yield on ADA, which is a Cardano token. So we're looking at other tokens in a similar way that we can get yield on and give them back to investors. And that, of course, is nicely dovetails our earlier conversation about how it fits in with the digital asset treasury companies. That'll have to go beyond the initial, let's go accumulate crypto. Well, what do we do with that? And I think the shift will go from sort of stable coins and DATs this summer to DeFi in the fall and winter.
Okay. And just really quickly, Bundeep, I imagine in any sort of industry or sector, there's always an inflection point where you could say, okay, we started heading in this direction at this particular time. Do you think that we've seen that inflection point, and you really see this as the next stage for where the industry is going?
Yeah, look, there's about 250 companies out there that are pursuing this digital asset treasury strategy, right? That's on top of the inflection point we had a couple of years ago when the ETFs got legitimized. So I think those two inflection points are like here to stay. It's an irreversible trend now for large corporates and indeed countries to hold crypto. So that inflection point, as I think, was achieved this summer. Now it's a question of where does it go from here? Will there be convergence, confluence, M&A activity? That's what we'll see in the future, because even these DApps, not all of them will survive. The bigger ones will eat the smaller ones. And I think the various bigger ones will have to become more like operating companies and not just simply holding companies to maximize the returns.
Well, it's going to be fascinating to watch, and I really appreciate your insight into this as well. Bundeep, thank you so much. Good to see you again.
Thank you, Steve. Always a pleasure.
All right, Bundeep Rangar. He is the CEO of Finecchia International.
The featured company is a paid client of Proactive Group Holdings, and this recording is disseminated by Proactive on its behalf. It is for informational purposes only and does not constitute investment advice, an offer, or a solicitation to buy or sell any securities. Viewers should conduct their own research and consult a qualified financial advisor before making investment decisions. The views expressed are those of the speaker and do not necessarily reflect those of Proactive Group Holdings, trading as Proactive Investors or its affiliates. No responsibility is accepted for any loss arising from reliance on the information presented.